From the Dallas Morning News, commercial real estate's better days could come later this year, CBRE predicts. The battered commercial property business will likely see a rebound later this year. That's the forecast from top analysts at Dallas-based CBRE Group, one of the world's largest commercial real estate firms. Quote, "We expect 2024 will be decidedly different for real estate investors," Darren Millot, head of America's Capital Markets Research for CBRE, said. Activity levels should stabilize and begin to recover later in 2024. Commercial property investments nationwide were down more than 50% below 2022 totals. Quote, "We expect the first couple of quarters of this year to be sluggish, but we do expect a recovery to begin forming in the second half of the year, and that will leave us with investment volumes up 5% year over year. Investors are keen to deploy capital." Commercial real estate activity saw dramatic declines in 2023 with higher interest rates, tighter financing requirements, and worries about a possible recession. But recession fears have eased and interest rates are expected to move down this year. Quote, "The overall cost of capital will remain relatively elevated. Banks are likely to remain conservative," said Millot. They are wary of losses in commercial real estate. We estimate that those losses could total up to $60 billion over the next several years. Building owners with loans that come due will continue to face hurdles to obtaining affordable financing. Quote, "Although we see lenders working with borrowers, we do expect distress to be a story in 2024, particularly in the troubled office sector, but also to some extent for multifamily." Jessica Moran, CBRE's head of America's office research, said there's still pain ahead for office owners. Quote, "We still expect overall leasing levels are going to remain below pre-pandemic averages, and 2024 will be another year of negative absorption." But with office buildings starts sharply lower, Moran said building owners will eventually benefit from lower vacancies at the best newer buildings. The construction pipeline has been at its lowest point in a decade, she said. It's just about half of its pre-pandemic level. The slowdown that we are seeing in new supply is going to facilitate a more competitive market for top-tier office space. The industrial building market is also seeing a slowdown in development. Quote, "We're seeing a huge decline in the construction starts due to difficulties in construction financing. The decline in starts is going to cut completions by more than half in 2024. That's going to give some time for the product built in 2023, especially in cities with robust completions like Dallas, Phoenix, and Indianapolis, to absorb some space." Bree said some cities could see an undersupply of industrial space by 2025 if new building starts continue to decline. Quote, "The retail space is at an all-time low in availability," said Brandon Isner, CBRE's head of America's retail research. "New deliveries of retail space have been low since the great financial crisis, which has allowed demand to organically catch up." But even with a lack of retail space, don't look for developers to make up the shortage. All the elements are there to justify new construction, Eisner said, but construction costs remain restrictive.